special customer training call. This is just for you guys, those who joined us. We're pretty much you
Hmm.
guys are pretty much the founding members. Like the
Yep.
first 48, I think, is the count. And so yeah, thank you. We appreciate you guys supporting us. So in turn, we want to give you guys a special training course that's kind of more focused towards the guides because you guys actually have the guides. So the other Zoom calls had a lot of new people in it, so they didn't kind of know where we were. But yeah, I guess can I get a survey? Can you guys type 777 if you went through the all the material? You guys can type it in general.
Yep.
But yeah, I just wanted to kind of gauge to see how many of you guys got to finish all of the quick start. But yeah, so for the first thing, some of the things that we're covering on today's agenda is one, cups and handles and other high probability patterns. So if you guys haven't seen already yet, the futures look pretty grim, and so usually what I do myself, and I know Anand does the same. When things look pretty grim, we just kind of take a step away from the keyboard and get back to fundamentals and study because there's no point in
Yes.
watching or forcing yourself to get into trades. A lot of people they
Yep.
say, "Hey,
I mean,
spread."
you could do puts when if it pulls back, but the suggestion would be just stay out of it until the weekly chart turns from red to yellow on the squeeze.
Yeah, we gotta wait for things to settle. So while things are settling, why not crack open your studying materials, organize your setups, kind of stick to the fundamentals and don't make any panicked decisions. And then
Right.
the 1% rule that we mentioned in the book, it's basically to help you in situations like this where overnight you have no control of what happens in the news. So if you're overly exposed, if you're 70% in, then that looks like your account's going to get a haircut about 30-40% maybe upcoming Monday. And that's on a semi bad news, weekend. If it's a really bad news, then that could be accounts crushed depending on how much time you have on those options. But yeah,
Correct.
so we want to go over some cup and handles. We're gonna do a review of the monthly, weekly, and daily squeezes. Just a reminder for rules and discipline check. And then so the faster you guys learn discipline, the f- the more likely you're not gonna blow up the accounts and you're gonna learn a
Correct.
lot better. It's boring. It's not exciting, not an exciting way to trade, but it's rules based. The ETF X-ray we mentioned before, math of losses, and then a review over some stocks. So if you guys have any tickers in mind, save those for right around the 2/3 mark. But but yeah. So for cup and handles and high probability patterns. So you guys may have seen this before. And then so a lot of people say like, oh, those are just random triangles on a screen. Oh, you're just doing astrology on the charts and it doesn't mean anything. But no, what these means is when you see these shapes, it tells you a story. It tells you something that's occurred for that particular stock. And so the main points of the cup and handle is first, it's this rising, like maybe 30-40% rising area. And then you have the cup shape, which is a curve. And then you see the handle portion, which is usually down or it could be horizontal. And then so that is the buy zone right around here. I don't know if you guys can see my cursor. And then you'll enjoy the benefit of noticing this pattern here. So this doesn't mean you can hold it, 20 years from now. It means that you can enjoy this move. And when you get around this consolidation, this you should probably start, thinning out, start getting out of that stock. So the story that this tells. So if you can spot this on your charts, especially if it's a blue chip stock, anything like a Microsoft, used to be a Adobe, but like say Netflix. Now, if you spot this on a Netflix or something always spoken about in the news, part of the S&P 500. If you see this shape, so what the story that this is telling, and you can chime in and on if I miss anything, but pretty much the stock has a lot of strength and a lot of buyers are participating. Somewhere in after that point, they call it weak hands. People who just kind of like lose faith in the stock, they start to kind of slowly sell, and then these sellers scare the previous sellers, so they all kind of start
Someone
letting.
was saying they can't see the other screen. Can everybody see what Henry is showing right now with the slides? Okay.
What
Okay.
can
Good. 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 Okay.
can they see
I guess
okay?
some people are saying no, they can't see. Did you share? When you share, right? Share the entire screen so that when you if you switch from one window to another, right? Because if you don't, otherwise, if you share just an application, right, the
Mhm.
only thing you could see is the application,
Oh, okay. Let's see.
right? So when you share, you have to do like entire screen share.
Let me see. I picked the whole window. Let me see. Let's see. You guys can see me scrolling around, right, and switching windows. Yeah. Let me go back to yeah. All right. Can you guys see okay?
I think
Run it out.
when you were
Okay.
where
Let's
you're
do it one
trying to
more
turn the
set.
up and handle. Yeah.
Second. All right. Okay, so as I was saying, these are where the weak hands kind of let go of the stock. They lost faith in the stock. They sold it, and at this point here, this is accumulation. This usually, if this is like a Microsoft or a Netflix, a Google,
People can only
um,
see the
any of those kind of
presentation, not
stocks,
seeing it.
this is when people start picking it up on the 200-day moving average. They start picking up below the 200-day, so they just know that they picked up a stock at a good price. Not knowing when are we, when is it going to recover? They usually don't know. They probably picked it up on a price point, but so what you guys have is you guys have the power of the squeeze, like looking at the monthly squeeze or the weekly squeeze, and that'll tell you when it's around this time that you can kind of pick up on a bottom. This can you can probably see this on the weekly histograms. So slowly people start to accumulate the stock, and then it goes higher, which it gets more people invited to the auction house. More people are buying the stock. It'll probably be start being front page news. Everyone's looking at it, and then so here, this small handle part, this lets you know of the distribution. So this is the part where these people here who held through all of this finally got all their money back, and they start to let go of the stock. They say that's it. That was a full 1 year, 6 month, 2 year, 10 years, whatever the case was. They let go of the stock because they finally got their money back. But then this is the part where we look to jump in, preferably here, and preferably with the squeeze. So when you look at your squeeze indicator, you want to look at your weekly and daily, and if you can
Oh,
see
Henry,
those.
I think it's still showing the slide. You need to share the entire screen,
Um, so
right?
I'm only sharing the slide. Let's see.
Yeah, you're only sharing the slide. Yeah.
Yeah, that
Yeah, that's the problem. You need to share the entire screen, otherwise
let's
it
see.
won't,
Hang on one second.
it will only show the application you're sharing,
One second.
right? So unshare it, right? And then try to reshare with the entire screen.
Okay, share screen. Yeah, sorry about that. Let's see. Let's try again.
So now try to share your other application, right? Or the chart that you were showing.
Okay, so I'm only sharing the slides. That's all I'm
Oh,
sharing.
okay.
Yeah.
Okay. Okay. So I guess
Where are they
uh,
messaging you? I don't see it.
Can you hear me?
oh, I mean it's messaging on the chat, I think.
Okay. Okay, so you guys can see the screen, cup and handle.
Right? I mean, I think with with Discord, it's not always intuitively obvious how to share the screen.
Hang on 1 second. Can see the screen, but not able to see
Yeah,
the cursor.
you're
Oh,
only
so
showing
they
the
said they,
slide.
they can see the screen, but not the cursor. Okay.
Yeah, no, no. I think the yeah, that's part of it, right? Like cursor won't, show, and also if you switch to a different application, right, it won't show the other application,
Okay.
right? So if you're trying to show examples and like, there we go. Now it's working. Okay.
Yeah. Okay. Okay, I
Yep.
get it.
Yeah. There you go.
Couldn't see
Yep.
the
Mm-hmm.
cursor. All right, sorry
Yep.
about that. All right. Sorry, moving forward, we don't have a whole lot of
Mhm.
time.
Right.
Okay, you guys can't see my cursor. I'll find a way to highlight it or something. I can use one of these tools. So these are recent examples of cup and handles. So this is usually the entry point where you want to get into, where it says 8, another pullback, or 7, stock once again test its highs. That's the entry point there. Cup and handle examples. So I just took posts because I tried to record them and post them into the group. That those are the before and after. If you're able to spot the cup and handle beforehand, it's pretty much considered like a very high probability trade. So once you see that, you know the story, you know the history of the stock. So this is something good, that if it's a stock that you've been waiting to accumulate, maybe you pick up shares, maybe you pick up some leaps, maybe you take some short term, but all those will probably work. But give yourself a stop loss. Identify where you're gonna let the stock go if it doesn't go your way. So a good rule of thumb is 50% loss on an option. That could be one way to do it. But yeah, so this is
Or
gold
if the
cup,
story changes,
or yeah,
right?
you get bad
So
news.
if you look at the cup and handle, right, since this is a more longer term trade, right, what you want to do is either the base of the cup itself is squeezing on the weekly chart, right, or the handle is squeezing, right? I think the handle squeezing is probably the better, entry point, right? So if you get like a squeezing weekly handle on the on the cup and handle, right, get ready.
These are other cup and handle examples. We
Hmm.
had one on Microsoft, looks like around 22, 23. And so
After
that one,
market correction. So cups and handles are really great after market corrections.
yeah. Bitcoin, it works on other assets too.
Hmm. Bitcoin tends to form a lot of bases,
Yeah,
right? So that's another thing to make a note of.
accumulates for a while.
Hmm.
Inverse head and shoulders. This is sometimes hard to see, but I found out that Finviz will scan for it if you use the screener. Let's see here. Let me close this. And so I was playing with Finviz last night to make sure, because I remember seeing it here. Let's see, large market cap for signal. You're gonna do inverse head and shoulders. So if you search this way, you can take a look here, but uh, bear in mind that if you're looking for patterns, they work better on a more popular stock like a blue chip. Um, those tend to, I guess, since they have so many participants, the story tends to follow through. But this one marks looks like the left shoulder, right shoulder. So just looking at this plane, I wouldn't have spotted it right away, but this helped me spot it. So take practice drawing your cups and handles. If you're not sure, draw your cup and handle, post it in the Facebook chat, and then me or Anon will go there and we'll take a look and make sure that what you're doing is correct.
Okay. So if you go back to that previous thing you showed, right, um, with the chart there, right? Not that one, the one where you were showing with I think it was the
For Finviz,
spy. No, 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 not the Finviz one, the other one, that one. Yeah. So this is something, okay. So you're showing here the daily chart, right?
yes.
So show the weekly chart on this one,
Okay.
right? So here is something to note, guys, right? the daily chart, right, can go sideways sometimes for a very long time, right? What you're looking for in those situations is when it's been going sideways for a long time, that the weekly chart starts to register a turned on squeeze, right? So if you see the midline right there on the weekly chart, right, and you see those orange dots right there, right, orange, red, yellow dots,
for the squeeze.
right, yeah, for the squeeze, right, that's when you're like, okay, this there is something going on here, right? So it can go one of two ways, right? If the resistance is broken, right, of that sideways motion, then hey, great, I'm happy with that, right? Because it'll keep it, it goes up for some time, right? But if the downward motion is broken, right, I'm sorry, the support, right, is broken on that sideways action, and we are also seeing like a lot of instability in the in the news and things like that, right? There is potential for a drop, right? So whenever you see the weekly squeeze turned on, start to get alert and see what's going on, right? On both the technical side and the fundamental side,
Yeah, yeah, nice.
right? And you can see in that particular thing, right, the support got broken,
Yeah,
right? Now, could that lead to further downtrend? Maybe, I don't know, right? But
yeah,
what I'm saying is, caution. I'm advising caution here,
yeah. If
right?
bad news got us here,
Hmm.
more bad news will take us, further down. So let's see for ES. Let me see. I thought this was interesting that we just tapped the 200. So
Yep.
maybe this can give us some help, but
Possible,
depend
possible,
yeah,
yes. But be
depending
careful.
depending on how the news follows through, where the theory is, bad news follows more bad news. It's just
Right.
more it's more natural.
Remember, guys, trade what you see, right? Not what you think, right? So if you start seeing like the early moving averages, like the 8 and the 21 starting to cross over, right? Hey, Henry, can you go back to that spy chart again before you show the VIX,
Yeah.
right? Because yeah, that's also important, right? Now put the 8 and the 21 here because the weekly 8 and 21 crossing can be a pretty telling indicator as well, right?
Yeah.
Just briefly, just temporarily, put it in and let's show everybody the.
All right, you want 8 and 21? We'll do it a little bit thicker. All right. Let me take out the 50 and the 200 so it's easier to see.
Yeah, make it a little thicker so people can see, what's happening here.
All right, does that look okay?
Yeah, can you guys see that? Okay,
Okay.
okay, good. So you can see like when the tariff news, was hitting, right? That kind of caused the 8 and the 21, to cross over and drop, right? If you see the 8 and the 21 crossing over on the weekly, right? Because daily can change pretty, relatively quickly, right? But once the momentum goes down, right, on the weekly chart, right, we have to be a little bit more careful, right? That's not to say it won't turn around and go back, right? But again, right, when it does happen, right, and then you start seeing the ADX turning, turning red, right, along with that weekly, type of thing, right? Then what you do here is go back to the daily chart and then determine. I mean, if you want to buy puts, that is, right? Now, staying out of this is also a viable option,
Yeah.
right? You can stay out of it and wait for the squeeze on the weekly to go from red to yellow and then buy in. That's also a good way to play it.
Yeah. Yeah, so what we're leaving is we currently before we had a kind of a predictable chop where, you would buy your calls here and then sell here or somewhere in between in this range. If you bought your calls here, sold somewhere around here on the 21, that was fine. Same here if you put puts down and took them down to the 21, that strategy was working all the way up until here. So now it's getting a little bit more challenging. So
Yep. Now if that goes above 20, we know, okay, now there is a serious downtrend, right?
so the fun the good part is that we can see with VIX how is the fear getting um kind of like if it's leaving the market, if it's staying. So
Hmm.
so we're gonna go into VIX. All right, let me clean some of this up.
And you can see actually the VIX ADX is like really starting to to show.
It's starting to take off, yeah.
Yeah. So
So let's see, let's look at a previous VIX spike, and then let me compare it to the SPY. We'll do a we'll do a new pane. All right, I'll take out this and this just so it's easier to see. Okay, so the bottom, I'm comparing it to SPY, and then the top, this is the VIX. Here, this is just a simple Bollinger Bands. So this is the VIX ticker, and then I added Bollinger Bands and left it at, here, let's see, my settings for Bollinger Bands is a little different. These are the settings that we used. 19 length, and standard deviation is 1.58. So, how do you know when it's clear, when it's good to go? So the the market will give you the signals, and they call it the VIX signal. So usually it's when the VIX falls out of the Bollinger to an extreme, just say 28 to 30, and then it starts to make its way back inside the Bollinger. So this is kind of as VIX goes up, fear is increasing, and as VIX smooths down, fear is starting to kind of evaporate into the market. And then so one of the strategies is where you take the VIX re-entry. This is this candle here. So let's see if you took this one it was okay. It didn't quite work. Um, but this second looks like VIX went back up. We had a second entry here. This one here, the second VIX re-entry, it looks like you would have been okay. Let's see, going to November 25th. Let me look at a full chart so I can see how that looked. November 25th. November 25th. Okay, that was here. So yeah, you would have turned out okay based on that VIX re-entry. So let me go back to here. So let me go
you
back
can
to
use
where
the VIX re-entry and the squeeze, either the daily or the weekly squeeze to enter.
yeah. Yeah, you can use that as well. Yeah, so this one here, this one is a little different. We haven't had this kind of move in the VIX in a while. See, this one is usually the VIXs are these sudden spikes. This one here. So let's see. Let's look at the extreme example. So this one is August 5th of 2024. The re-entry is August 8th, 2024. So let's look at August 8th, 2024. August. Let's see, June, July, August 8th. This is the SPY, and you were just coming out of Bollinger, so yeah, that was a nice entry.
If you look at the weekly squeeze also on that, right, you'll see
Let's see.
that it would have,
Squeeze.
or one of either the weekly or the daily squeeze, one of those would have given you the
It
clue
would have
to
told you.
enter.
It would have told you too. That's true.
Hmm.
The 8th. So coincidentally, you could have saved yourself the stress of looking at the VIX, and you could just use the daily histogram on the
Yep.
squeeze, and so look at that. So
Except
August
during
8th.
times of turmoil, right?
Yeah,
um, the daily squeeze will generally work. So if we are in times of turmoil, go to the weekly squeeze to smooth things out a little bit.
yeah. So let's see, August 8th. I'll go back to the VIX just to make sure. Did I see that right? August 8th, November, December, August 8th. Yeah, it marked the VIX re-entry perfectly. Okay. I was kind of that's new. That's really interesting. I didn't know that it would time it that right. So yeah, the daily the daily squeeze works really well. Um
Mhm.
But yeah, we'll circle back to that.
Like
Uh,
80% to 90% of the time, right? The daily squeeze transition
yeah,
from red to yellow does actually work, right? Except again during times of, turmoil. So if you start seeing like the alternating red and yellow on that, right? Then go to the weekly squeeze because that'll usually be more stable, right? Especially once we see supports breaking, right? Then okay, get to the weekly squeeze, right? Especially also if you see the weekly squeeze turned on, right? Because the market's been basically in a tight price action channel for a while, right? Then you definitely want to keep an eye on that.
all right. So yeah, sorry, the guide, it mentions the TTM squeeze, and I'm so old school, I'm so used to calling it that. But if you're using TradingView, and then if you want to use the exact same one that we're showing in this example here, use this one here, which is the make it zero. This one. Yeah, sorry about that. Let me put that in the chat. So Roth said, can these be used for options or swing trading? Yes. You might be
Both.
holding these for a week to 2 weeks. It's possible. Go farther out to give yourself some time. Yeah, like Anand said,
And if you
both.
use the weekly chart, right, it'll be even longer,
Yeah. So
right?
here's a simple way for you guys that are new. Instead of, if you don't want to look at the VIX and go back, you can just follow here. If you see the smoothing, so it looks like we were cleaning up here. Things were looking smooth here, but then the bad news ended up here. If you look in the
Yeah, and
past,
and then support support was broken, right?
yeah,
So something to be on the lookout for. When the
this
support is broken, be careful.
yeah. So this
Okay.
here, and I mentioned this to me that this Darvis box is now invalidated because of this candle. But I
Once
leave it,
once it gets out.
yeah. So I leave it here just as a reminder of what was the
Look
old
at
range.
but look at the candle on the rightmost side, right? That candle is even if that previous one didn't invalidate it, this one definitely invalidates it, right? It's hard to see, but yeah, it's right there.
But yeah. So let's see. I'll try to get through these. Inverse head and shoulders. This is a bullish pattern, and this is an example. I think this is one that we picked up. Let's see, 19 length and 1 point
Yes, good.
8.
19 length and 1.58
And
standard
so
deviation.
drawing your inverse head and shoulders, you can practice this. This is not one of my best drawings, but when you guys have downtime, do this around. Try to find 50 of them and draw them, and then we'll clear them out again next week and redraw them again. The more you draw and practice them, the better that you're gonna get, and you're gonna start spotting these without any help. Without so it's good to keep practicing those. Trading tightness. This is similar to um, the symmetrical triangle. I remember this one time I had the troll guy post, "Hey, anyone can draw random triangles." So it was pretty funny because yeah, drawing triangles can make you money. So I thought that was kind of amusing. So this is some different types of trading tightness on how the pattern can look. So this one I took the picture off my wall just because I couldn't find the original digital version of it, but I can share these with you guys in an email at the end of this call. So I try to look for some examples. So these ones here, let's see if I have the ticker on them. That one was Western Digital, WDC. And so if you spot kind of this consolidation, this would be your buy zone above that consolidation period. These ones here is showing the tightness. The three parts of it is you need to have that 30-40% move up, and then you need to be trading higher lows and then lower highs, and then your breakout is in this point. And then so these I found these without using the squeeze, but if you did use it with the squeeze, it gave you a much more accurate and kind of an easy way of grabbing that. So let's see. This one was December 4th. December 4th. And if I zoom out, if I just follow the yellow daily squeeze, it would have got me in here, and then there was plenty of times for you to exit in this one. And then, so let me go back to the other example. I think the other one is STX. So this one here, we identified kind of the tightness trading. This one is falling wedge. This is a bullish pattern. This one here is ascending triangle. This is also bullish. Your buy zone would be just above the yellow line here. Buy zone would be just as soon as you see the trend break, that would be your buy zone there. So, but yeah, going back to using the squeeze, it pretty much identified your entry right there. So looks like you would have been choppy a little bit, but you would have been okay for the long haul. Yeah. Let's see. Daily, monthly, weekly, daily, weekly, monthly squeeze, when to use. So let's go here. Go to monthly. I'm gonna find a cleaner chart to do this on. Okay, so I'm showing the QQQ. So this is times when it's when should I load the boat? And so say for some reason you inherited X amount of money from whoever and you want to rush to the stock market and invest it, kind of hold yourself back because there's a way to where you can time it a little bit better. So a lot of people, they just invest as soon as they get money, not knowing where are they investing in. Are they investing in this point here, or are they investing in this point here, or so they don't usually, no one knows where the market is. But with using the monthly squeeze, this can kind of help you um, determine where do you have a higher probability of entering at a good position. So one of my favorite things to look for is the yellow monthly squeeze, which is really rare. So let's see, going back, the last time we had a yellow monthly squeeze was in '09. So it looks like recovery from the recession was the last time we had a yellow. And then we got one, which seemed like a miracle. We got it here in 2023. So something to think about. If I'm looking at investing a lot, I would go to the monthly to just to make sure that my story kind of matches with my intention matches with when do I want to time the market, when is it the bottom. And then this is another squeeze to confirm it. For the weekly, I'll use this for leaps. And then so let's see, did we lose Anand? Oh no, Anand's muted.
No,
Okay.
no, I'm here. I'm
Oh,
here.
sorry. Okay,
I just
sorry.
muted because
for
there was
for
noise coming.
for Roth is asking on the ADX, what determines the color? So for ADX, green is your bullish trend, and then ADX is the speed. So this is a very strong bull signal. When you see numbers like 25 or 20 or above, this one's at 40. This is a very
20 or
strong.
above means it's trending, right?
This
Red
is
means downward, green means upward, and orange means it's sideways. It's not trending, which means it's
yeah.
below 20.
So this is trending in the bullish direction. Same thing with red. So these here I just drew manually. It's not from the indicator. And then so orange is to identify chop. So looks like chop is here. Looks like we're still currently in chop. So one of the things that me and Anand were talking about is ADX being at 17, 18. So this thing is starting to catch some speed. Once this thing cracks to 20, then we're going to be basically in one of these markets. Or if we can be in one of these periods. We don't know how long that's going to last. But let's see. Let me go back here. That was on the weekly. Yeah, so let's see here. This is yeah, we could be entering one of these. But yeah, daily should be used for your regular swing trades. Um, Normally I would say your swing trades are gonna be at least 2 months out, for short-term periods. But for anything to be considered a leap, I would say at least 6 months, 7 months out. color, direction, height, speed should see. So for ADX, you basically this is kind of like a dressed up version of the ADX. If you see the red lines going up and then the green lines down going away from each other, then that's kind of the bearish direction. When you see the green line up and the red going away from the green, that would be the bullish direction. And the ADX just kind of tells you the speed of that current trend. And so here's an example of ADX higher than 20, red line separating away from the green, and that's like a really fast drop. So for next week, what I'm looking for is I'm looking for this to kind of smooth itself out. I want to see this go back to yellow. And let's see, for that one, for the ADX, it would be this one.
Actually, what what I would like to see is, for it to make a decision, right? Either to the upside or the downside. Most likely, it's going to be the downside based on the futures.
Yeah. Yeah. If yeah, Anand has a good point. If it makes a decision and goes down, then we can kind of get past this,
Right,
kind of
because then what we can do, at least now we'll know what to do, right? We can, for the downtrend, anytime it pulls back to the averages, we can buy puts, right? Until the BPSPX goes to below 30.
be this one.
Right?
It's for change that one. And then
Change
you can switch
frame.
between monthly, weekly.
Yeah. On the top there, you can change the time frame. Right there. Yep.
Yeah, my favorite is the monthly. Even if I'm
Oh, I
ever
love the monthly.
if I'm
But
ever
we
freaking
hardly.
yeah, if I'm ever freaking out or panicking, if I use the monthly, this kind of lets me know where we're at. Powerful things on the monthly is the 21 moving average is really powerful. This one
Hmm.
didn't spend that much time on there.
So
If
what looks like a blip there, right, on the monthly, right, was
yeah,
everyone panicking because of the
yeah,
tariffs.
yes, yeah, we're freaking out right now, and we're just barely hitting the 8 EMA. And so
Yep.
anytime in the past, in a bull market, anytime that we hit the 8 EMA, that means that we're just in a strong, steady bull market. This one here, this is a nice candle. This is a hammer candle pushing away. This gave us a clue that the market could be pushing in a different direction. So this one here, this candle looks a little weak, so that's why we have caution moving ahead. But let me go back to the slides. Oh, this one here, I posted this earlier in the Facebook group. So Qual Maggie is a really famous trader. I think he trades in shares and I think in some options, but I think he turned like I don't know $1,000 account to something crazy like 500 grand or something. And so one of the concepts that he talks about is surfing the stock. So what you need in order to surf the stock is you need that 45-degree kind of direction. And so you would see that kind of example here. Let's see, kind of like one of these. You have this kind of flagpole, and then you have that tightening. So once you have this tightening, then this is your breakout. Let's see. Let me try to zoom in on that one. Zooming in here. This here where it says breakout, that would be where your entry goes. So once you're here, a lot of people don't know. Okay, when do I get out? Do I hold it forever? But no, this will give you a clue of how to manage that trade. So 10-day SMA, as the stock is kind of continuing to rise, so you're holding shares, you're holding your 3 month out option, 4 month, 6 month, whatever it might be. One way to follow this is rule number one is when you see 30%, start to let go of some of that stock. Start to sell a little bit of those options. You have 5 options, sell off one, sell off two. You see 60%, sell off a little bit more. And then as you're holding it, because you could be catching something like this. Let's see, let me go back to daily. As you're holding it, this is continuing to appreciate. So your position is getting a lot bigger. You're gaining on this stock. So why sell it? So you're kind of surfing this. So let me go back to just the 10 EMA to make it simple. Let's see this one and easier to see. 10 EMA. Let me take out the 21. So this is here. This is getting in on, let's just say, Western Digital, and then you took it at the yellow squeeze. And so you're writing this thing. This one here, if you follow the rules, you would have sold out of your position here. As soon as you close below the 10, that's when you would, the run is over. You'd sell out essentially then. So you would kind of want to stay above the 10. If you wanted to take more risks, you can surf above the 20, but just kind of know if your stock's trending, it's strong, you're not going to trade below the 50, while you're holding it. So this is the time that you can enjoy the kind of that motion, that upward appreciation of the stock. So this could last anywhere from 1 week, could be 1 month, it could be 2 months. But yeah, this is how you start to lock in your profits. So rule number one, 30% sell some off, 60% sell off the second option. You have a runner, you can let that runner run till, let's just say here. Say you bought it around here. You let your last runner run until here. You see this close, or let's see, that one did not close. This one closed under. Okay, so this one here, this one closed under the 10 SMA. This would be your exit point right here. Exit out on this one, on this candle. In the meantime, you calmly held above the 10 and slowly sold out of your position. And then so for Western Digital, we still have red. For me to consider this again, I would like to see some yellow histograms. If I can see something like this again, if I can see, if I see this, I'll get in this on some Western Digital again, and I'll use this as my buy zone. So yeah, create your watch list. Don't make it 1,000 stocks. Just keep it like 50 or so of ones that you like, companies that you like, and then
Make it
look
manageable,
for these
right?
patterns.
And then keep an eye both on the the SPY and
Yeah,
QQQ as
yeah,
well as the stocks.
Live fire. I would have sold out here. If I bought here on this breakout, I would have held, and then this here stop. The run is done. But I mean, if you entered here, that is a 36% gain.
Yep. Yeah,
Yeah,
exactly. Right.
and then
According to the rule, yes,
yeah,
you sell right when it
you
goes below the 10 and get out.
this when you're done. But as
Yep.
you're doing this, you're letting a little bit of your shares off. You have 100 shares. You're selling
Yes.
30 right
Or
here.
you can
You're
sell a little
selling
bit off at a time.
you're selling another 30 here. So maybe by the time that you're here, you only have 40 shares left or so. So then you kind of took profit along the way. But using the 10 SMA, let's see. Let me make sure I have it on 10 SMA. Yeah. Use the 10 SMA on that one. What's that
Mhm.
one? SMA.
Yeah, February 6th, that's right. Right. But we probably would have been selling along the way, right?
Maybe. Yeah. Yeah, use the 10 SMA. It's a little
Hmm.
slower.
Yeah.
But for this kind of thing, you want to I guess be sure it's less erratic. It's a little bit smoother. So February 24th, February 6th. Okay. Yeah, sorry. I was using the wrong one. Use the SMA, so you would have held it till the 24th. So yeah, if it's shares, it's no big deal because you're not getting decay on the option. So
Yeah.
February 5th. Let's see, February 5th.
February 5th on the
Yeah. Oh,
EMA.
yeah. Yeah. This
Yeah,
one.
yeah.
This one.
Yep.
Yeah. You would have got. Yeah.
Yeah, you would have gotten out there.
You
Yeah.
would have got out. You
Yep.
would have got out
That's
there.
right. Yep. Like the rest, anything you have remaining, you would have sold off right there.
Let me see. Let me see if Intel had a move like that. But yeah. So yeah, discipline check. Two questions that every trade must answer. Is there a basis for this trade? Are you at support? Do you have a yellow daily squeeze? Did you define your risk reward? Did you find a way to enter this trade using only 1% to 5% exposure? Just because if you saw something on TikTok and you decide to put half of your portfolio into that trade just off of a feeling, you're probably going to end up with a bad outcome. So two, how much am I willing to risk? Keep that ammo. Your portfolio is an ammo, especially for if you're using the three account setup, which we recommend. Have your 401k, put it on max. Your Roth, make sure you max that out too. And then your day-to-day account where you're gonna use 1% risk and follow the daily squeeze, use that account. You're gonna learn a lot. Because if you can't trade $100, so what makes you think that you can trade 10,000? So practice with the small amounts, because those small amounts is what's going to train you for the bigger amounts. So so yeah, don't let ego get in the way. Be about the journey and learning and recording and journaling all of your trades, and then you'll get better over time. And if you're not sure on something that you're gonna take a position on, you can post it in the Facebook chat, Facebook group. We'll take a second look at it and then see if you guys are missing anything, and then we'll reconfirm it. Walk away if we stay away from biotech, banks, but I think the financials is coming back into play. So I think maybe there's an exception on that one. Your spreads, make sure your spreads are less than 20. You don't want to lose just by picking up on an option that has a wide spread. Make sure you check your open interest. Open interest should be over 100. If your money flow is pointing down, that should be of concern. Double check that one. If it's Nasdaq and Dow, let's see, kind of like what's happening to us right now. Yeah, Nasdaq and Dow down. It's like, let's say it down 1%, over 1%, then something's up. No clear support and resistance. If it's trading like chop, then wait for it to settle out. Don't trade within earnings. If you don't have a squeeze signal, stay away from that trade as well. Revenge trading. This is, I've been guilty of this before in the past. Just because you lost 3 times, and then if you go full port on the second one or third one, it doesn't, or the final one, it doesn't mean that you're gonna get any money back. If you're trading on gut feeling or a TikTok video, then you're pretty much gambling. Yeah, ETF X-ray vision. I'll go over this one again. This one is for Zax. So this is for building watch lists. If you're if you have a brand new installed trading view and you want to get into building your watch list, this is a good place to start. So IBD 50, that's these guys, investors.com. This is a good page to bookmark. You can get a lot of good news here. Um, they have some paid services, but a lot of their free stuff is really good. So you can just get, this tells you what's been hot, what's been leading in the market. And so if you take any of these, it looks like Palantir's in here, PLTR. How does that look? PLTR. Oh, so well, I like this one. Someone mentioned it, so I looked at PLTR. I like that there's a break in the trend. And I like this. It looks like the squeeze just popped, but generally, yeah, this is the buy zone, because the reason why this is a buy zone is because it broke the recent downtrend. So it only has two options to go. It either can go sideways or upwards. So, but yeah, be cautious. Confirm with the weekly. I like what the weekly is showing me with the yellow squeeze here. This looks
Actually, the
promising.
market is doing the same though, right? With
Yeah,
individual stocks, right? You never know. It can wiggle around a lot,
yeah.
right? But if the market is showing you a red to yellow, right, then all right, time to time to start looking for buying, for some cheap ones for buying.
So median analyst, it looks like they're projecting 199 for 31 analysts. So that's interesting. I take these with a grain of salt, the analyst opinion, because they are writers and they get paid, so they could get paid to say anything, but the average of a bunch of them, they're saying it's worth about 200. So I'm like, okay, that's interesting. That could be a target. Why do they think 200? That makes sense. It looks like an old top. So they could be targeting that. But yeah, back to X-ray vision. So building your 50. Some weird ads here. Okay.
Yep.
FTY. Right now, what's in the FFTY? Okay, it's not giving me the X-ray. Hang on one second. Holdings. Okay. So go to Zax.com, go to holdings. Let's see, they should be loading soon. All right. So X-ray vision. Open this up to 100. So this is a good starting point for building your watch list. Let's see, LMND. Check this list. LMND. And then since we have downtime, since the market is currently in its chop zone, you can start picking stuff that you want on sale. So I'll start looking for anything below the 200, below the 50. I start looking for golden crosses here. You might find some good stuff in here. So let me eliminate the 10-day. All right. Yeah. So this one here, you see the 50 separating from the 200. This looks like a good entry point. I'm just going to pick off another one here. TDMX. Sorry. Let's see, AAOI. I remember this one. AAOI. Okay, this one looked really good. It had that tightening. Let me see here. Here. And then so this gave you the clue here, the yellow histogram, and then buy zone being here. And then you got another squeeze here to let you know that you can enter. So there's a few things. So if you had this ascending triangle and then you had the squeeze, this kind of leans over that you have a likely of a bullish movement with that setting up, this higher lows here. So this one's kind of hard to spot. So it's going to take some practice to find these. But yeah, so X-ray vision, we can do it. If you can do the same on the SPY, and then you'll get 500 of the top U.S. companies, and then the squeeze works really good on stocks like these because they have a lot of volume. Think of the volume on a stock like an auction house. If the auction house is full, if there's a lot of people in there bidding on the stock, then you're likely to get a move. If the auction house is empty and you're looking at some XYZ radar company in the desert, you're not going to get a whole lot of movement from that stock, or you'll be sitting there waiting there bag holding, or it could be just a penny stock that just fades away and gets delisted. So stay within known stocks. That's where you're gonna find the best results paired with the squeeze. But yeah, that's pretty much all I have for the slides.
All right, excellent. So yeah, looks like the futures are like significantly red right now, right? Nasdaq, the NQ
Oh, we
is
got
down
127.
about 500. You know,
Yeah, that's gonna look
uh, Dow is down about 900, and the SPX is down about 120 something, 130 almost. So I think um, yeah, we do only for the early morning. After that, they are not relevant
yeah.
as
Yeah,
much.
this is
Only for the morning,
This is
like
the this is like the initial reaction of the market in the evening, in the morning
yeah.
session. So
So it's possible that things could change like midday, right? Which has happened quite a bit, but um, yeah, generally when it's down that much, right? It's going to be a big,
yeah, we're gonna see
you
we're gonna see
know,
a lot of the same tomorrow.
Yep.
So maybe
So yeah, you can see, right, the channel is already broken. So, my thing is wait for a pullback, right? Especially if ADX goes above 20, which I think it's showing, about to do. Um, right, then definitely you want to, play that, right? Watch the BPSPX and see, where it is. Right now it's at 50, right? I expect it to soon go below 30, right? Um, at some point, right? Maybe in the next couple of weeks, right? Now, what I would really love to see is the SPY weekly squeeze going to red as well, right? So that would be something fun. Yep, there it is, right?
we're at 50.
Yeah,
So usually it's around 70 or 65 lately.
yep.
It's
Now
been the
it's at
high, but
50.
if you can
So
get
it
one of
depends.
these, this is a good time to load up on
Yep,
leaps.
yep,
Let's see. Let's do we I think we have time to look at a couple charts. Let's see. Netflix.
yep,
Is it the bottom yet? Okay, so let's see. I like the breaking trend. I like
yep,
this gap. I like this gap up here. Um this gap I don't like right here. I don't like this gap. So this
yeah.
one,
So either one, it could go either way at this point.
yeah. This one is if the market continues to do what it does, we're likely to fill this one first before this one. Yeah. But these are low prices, so yeah. Yeah, I like the trend break. I like this. And then squeeze. This is really good. It's a perfect squeeze. And I think you can confirm it on here too. I think right around here is when we started calling this out in the Facebook group. We're like, hey, the yellow's starting to peak on the weekly, suggesting that the boat's turning around. I like this heavy downturn. Let's see. And then we have DPST. Okay, what is this? Okay, is this some kind of European government? Let's see. Let me look at the daily. Okay, this is weird. Um, I'm not sure what this is, but I like seeing the 50 crossing the 200 on the upside. I
You have
like
an
seeing
extra
that.
F in the
Yeah,
ticker.
but yeah, I'm not sure what this is,
Oh.
but yeah, 50 and 200 works for me on this one. If you can catch it like this, then you'll be pretty early.
There's an extra F in the ticker.
DPST, is that the
Oh,
right way?
where? Where?
D
For the Netflix one?
Oh, this
Or
is regional banks. Okay,
yeah. Mm-hmm.
it's
There we
regional.
go.
All right, so let's see. Let me look at. Okay, what the heck is this? Looks pretty flat for quite some time. This reminds me of like a TLT. I think TLT looks like that too. Yeah, TLT's moving like this. DPST. I don't know. It looks flat. Looks flat to me. Let me see what the monthly's telling me. Yeah, yeah, I'm not totally familiar of um this instrument, but it reminds me a lot of TLT, the way that it's moving. Um, I guess for bank stocks, they can be. I don't know. This is an example. Bank of America, I think it stayed. Oh, okay. It stayed 14 for the longest.
I
Um,
don't expect like bank stocks to do
on
all that well in the turbulent situation we are in,
XLF. Yeah.
you know.
Let me
Because
see.
look at XLF. XLF is also breaking that support, right?
Yeah. So looks like things might be cooling down on banks. Just by
Yep,
looking at the monthly histogram here, looks like things kind of cooled down here. But I mean, if you
yep.
can pick up, if you look at XLF and then you pick up bank stocks around here, you pick up some Wells Fargo, Bank of America, you're probably gonna make out okay. Energy,
Especially if you break out.
yeah, energy, yeah. This is a good spot to be in. Yeah, this here is the breakout zone. We're in this kind of consolidation. If you can get in here, Yeah, energy is gonna be in demand for a while. But yeah, okay. I do have a couple slides. Sorry, I didn't know that I had the math of losses. So if you lose 10% on an option, then you need to gain let's see. You need to gain this to recover. Let's see. This slide's kind of messed up. Let me see. All right, this one did not overlay. But yeah, so if you lose 50% on an option, you have to win like 10 around 10 times. I think that's what's behind there. 10 times in order to make up your account. So just this is just a reminder to never risk more than 1 to 2% of your trade. Set your stop loss before entering always. Always know where your exit is. Your small losses is what you're learning from. That's like pretty much like tuition. So don't take the outcome of one trade as failure. Um, you could have everything right. You can have the weekly squeeze yellow. You can have the daily squeeze yellow. It's Netflix. It's at support. You can have the most perfect trade, but with a weekend like this, your most perfect trade is gonna get stopped out. It's gonna get knocked out. So even if you had everything right, um, you couldn't get a not the outcome that you're looking for. So if you stuck with this as your rule, then you know you're not going to lose a whole lot you know but yeah, ready to go deeper. We have the swing trading accelerator. We're currently recording that, but we are doing a class version of this. So this would probably take place over 3 different sessions. The sessions would be around 2 to 3 hours each. So it's to take you from newbie trader to pretty much ready to hit the floor. Um, we're opening slots for the swing trading accelerator. And then so we have the VIP Elite Bootcamp. This is still in the works, but if it's anyone who's looking for that VIP kind of level membership, we have that. It's kind of crazy. If you text us at 4 a.m. and you want to look at a chart, we'll probably wake up and help you with that. So we're trying to make this really special. So this is going to be in the works. If you're interested, just poke at me or Anon. But yeah, we're taking around 5 spots for the 3 day course, and then we'll go a deep dive. But yes, continue to review the quick start guide. Send us your questions, and yeah, that's all I have for it for tonight.